trades are settled and mistakes are corrected and missed trades are fixed by trading on the curve. Hope you've enjoyed our fun facts. Thank you for joining us for Stock Market Trivia.
Well, welcome back to Wealth and Wisdom. We're speaking today with Kai Tao. And in our first segment, if you join us in the first part of the show today, we were talking about Kai's approach to interviewing management teams, to identifying stocks to invest in. And we wanted to carry that on a little bit further, Kai. We understand that you have a couple of case studies that we actually want to walk through those today and talk about how you apply your process to these specific companies and some of the things that you've identified specifically that our listeners and our viewers can take and apply themselves. Now, I guess the first one that we want to talk about is Smith & Wesson.
Great.
Tell us the background on that one.
Sure. Smith & Wesson is a perennial brand. They make pistols. And it was an interesting story. One of the techniques that we use is we evaluate insider buying with management teams, because when it's spread across the entire management team, it generally shows confidence in the company that they run. Smith & Wesson is a brand name that, people have been pistol owners forever. Now, what was interesting about this company was it was a fallen brand in the sense that they used to have 90% market share of the law enforcement revolver market. And along came a foreign company called Glock, and Glock came out with a more plastic-based pistol. And so at first, Smith & Wesson just laughed it away. They said, we have 90% market share. No one's ever going to buy a plastic pistol. Law enforcement, they don't like to change their habits.
Right.
Well, what happened was, gradually, the market share went from 90% Smith & Wesson to 90% Glock, and Smith & Wesson had no business left. And so you had a situation where the company had a good brand name, but it had a bad balance sheet and a management team that didn't know how to turn around the situation. Now, one of the things you look for is when a new management team comes on board, you look at their background, their track record. And in this case of Smith & Wesson, there was a new management team that had proven marketing background from Stanley Works and Black & Decker. And when they appeared, the first thing they did was they looked at it, they said, we have a perennial strong American-based manufacturing brand name. What was interesting is, here you have an American-based company, but our troops in Afghanistan and Iraq were buying foreign pistols because Smith & Wesson didn't have a Washington presence. So the first thing they did was they hired a lobbyist to advance their interests. And lo and behold, all of a sudden they started getting military contracts again. The second factor was they hired a Coca-Cola marketing executive to license their brand name, because what they did was, when the management team came over, they did a survey of all these different product categories: Smith & Wesson rifles, Smith & Wesson shotguns, and people said, oh yeah, that's my, one of the 3 brands I would buy. Well, guess what? Smith & Wesson doesn't make rifles, they don't make shotguns. All they have is a strong brand name that people recognize. And so now you have a lot of product extensions that can be added to the company's portfolio of products.
You mentioned, throughout this introduction, you were mentioning Glock. How important is it when you're doing an analysis of the company fundamentally to look at the major competitors, do a competitive landscape? Do you while you're looking, for instance, at Smith & Wesson, while you're looking at their rise in market share or brand extension or recognition or whatever that might be, do you try to correlate that to a drop in the major competitors? For instance, do you look for weakness in Glock?
We absolutely do.
For the strength in Smith & Wesson?
We look for ways where Smith & Wesson can make inroads. In this case, it was because the way the management team explained it was, with the Glock pistol, when you clean it, you actually have to click on the trigger first. And so there's been 400 accidents where they click on the trigger and there was actually a large bullet or some type of fragment inside. And so that was kind of like a way in for Smith & Wesson to talk to law enforcement.
Sounds like poor risk management there.
Poor risk management, exactly, that's it.
At least for the holder of the weapon.
But in this case, the new management team basically came out with new pistols that were competitive with Glock and at higher margins. Historically, the company's margins were at 20%. Their new margins for their pistols are all 40% above or higher. In addition, they refinanced their balance sheet, so they got rid of a lot of the debt, and so they were now financially stronger as a company. More importantly, on the legal environment, a legalistic environment, the federal government took away a lot of the liabilities for gun manufacturers from operator misuse.
Okay.
And that was passed about 1.5 years ago.
So you're basically looking at the big story. You're looking at the company. You're looking at the other stories that surround this company, particularly with the competitors. Now, when it comes time to look at the numbers from the fundamental report,
sure.
What are some of the numbers that pop out at you first? I mean,
so
earnings, I'm sure.
In this case specifically, what was interesting was when we spoke with the management team and then did our independent verification work with the competitors and speaking with gun dealers and also users among law enforcement, what we found was the company laid out a clear roadmap. First of all, they were going to have new products to generate higher margins. Second of all, they were going to clean up their balance sheet. So this is where credibility comes to it, because when they start, third of all, they were going to start winning contracts from the military that they didn't have beforehand. So what was interesting with this story was the stock was a $3.5, $4 stock when we found it. And when they announced all these items, the contracts were there, but the stock didn't go up. The margins you knew were there because the contracts were based upon the new pistols. And so if you talk about a credibility fact, everything they said they were going to execute in their business plan to turn around was being shown daily whenever they reported a press release in terms of the contracts.
Into the end of the year, you liking this stock?
I think this is a product cycle over the next 12 to 18 months.
Okay.
And so what was interesting was as they executed, then all of a sudden you saw that, wait a second, all of a sudden they beat their earnings estimates. The revenues were higher than expected. And the leverage, you had a company that was losing money all of a sudden breaking even and then making 15 cents a share. And this year they're going to make 30 cents a share. And hopefully that, that revenue ramp up continues as they continue ramping. It's an opportunity where the credibility factor, they said they were going to do something, they laid out a roadmap of what they were going to do, they started doing it, they didn't get any credit, and then when they actually reported it, it worked out pretty well. And this is where we can tie in the technical analysis.
Right. Well, actually, let's just, because I want to talk about the two stocks. Let's pick up on, okay, so you're looking at the picture.
Sure.
We mentioned Smith & Wesson.
Yep.
Let's talk about the other stock and basically pick up where we left off in Smith & Wesson so we can talk about two companies generally.
Sure. Yeah. The other company was BE Aerospace. And BE Aerospace is another company. Basically, what they do is they retrofit airline cabins for first class. And what was interesting was about 2 years ago, the company was losing money, and every analyst had a sell rating on the company. And so the reason was people were giving up the airline industry as dead. They were being U.S.-centric, we live in the U.S., so we only focus on our domestic airlines. And we forget that there's a whole world outside where there's international airlines. And what was interesting was the first thing you noticed was that BE Aerospace's management team were buying shares in the company. And why were they buying the shares? Because they saw an opportunity in retrofitting international cabins. What happened is you had Singapore Airlines and Qantas Airlines and all these United Emirates, these long-haul airlines.
Cathay Pacific.
Yeah, Cathay Pacific. What they were doing is they were retrofitting their first-class cabins so it would be almost like a hotel room. It's like an 80-square-foot, airline where you actually have like a hotel key to get your own individualized suite.
And more than peanuts.
And more than peanuts. And so that's coming out in the next 2 to 3 years as they roll it out. And so if you read through the filings, you would notice that they basically was losing money, but all of a sudden they had $1.5 billion of backlog of future business. And this business was counting on a lot of the international airlines investing in the super first class and improved business class cabins.
Are you counting higher oil prices and how they might have to cut back? The airlines might have to cut back on some of the money they're spending to become profitable. Is that going to affect a company like, it's ticker symbol BEAV, I believe?
I think BEAV is the ticker symbol.
BEAV,
Correct.
okay.
I think what's more interesting in this case is, again, because the international airlines need improved cabins to get comfortable business, and because this is a higher margin business. I mean, you're charging $5,000 to $10,000 per seat. And so this is a business customer that's flying 24 hours to Australia. He needs his rest, or he or she needs his rest. And so they're going to make the necessary investment as long as the product is good. And that's why these airlines are making the necessary investments. And so the company has been able to benefit from this upgrade cycle over the last 24 months, and which will continue for the next 12 to 24 months. And it's an exciting opportunity.
I heard you say on both of those, on Smith & Wesson as well as BE Aerospace, you mentioned about insider trading.
Sure.
Now that's, I understand that's reported on a monthly basis. There's a filing that the company has to report. So that's public information that an investor can go look at. Is there anything in particular that you would look for insider buying? Key individuals, certain amounts relative to the float? I mean, you wouldn't just look at...
Absolutely all of the above. A lot of times companies now know how to game the system, and so they buy 100 or 200 shares, and that's really useless in the overall picture. However, what's very exciting is when you see a vice president, a lower executive, buy 5 to 10,000 shares of a $10 stock, because that's a significant portion of his compensation that he's reinvesting back into the company. That all of a sudden shows a lot of confidence. It's more than the chairman of the board of the president who already owns 1 million shares and he buys an extra 1,000 shares.
Kai, we're running out of time here. If any of our viewers want to get in touch with you, how would they do that?
They can reach me at my website. It's www.asgardmanagement.com.
Asgardmanagement.com. Thank you very much for joining us. It's been a
Kai,
pleasure.
thank
Hope
you.
to have you
Thank you.
back. It's very
Appreciate
interesting. Okay, thank you.
Take care.
Well, this wraps up another episode of Wealth and Wisdom. We want to thank you for joining us each and every week. Please visit our website. We want to hear from you so that we know what's most important to you. We'll bring up the topics and we'll do the best job to bring the best guests out for you. So have a good night.
Good night.
To receive a copy of your favorite Wealth and Wisdom episode, or if you have a question or comment about our program, please feel free to write us at Wealth and Wisdom, care of WXEL, P.O. Box 6607, West Palm Beach, Florida, 33405, or call us at 1-800-915-9935, extension 4477. We look forward to hearing from you soon.